Good morning and welcome back to Almus Market Mornings. The theme of the slowing US economy was further reaffirmed after the retail sales data rose slower than what markets were anticipating. The consumer sentiment seems to struggle in line with all the previous data releases. Now, domestically, rupee saw some appreciation yesterday as India's February merchandise trade deficit shrunk to 14 odd billion dollars as compared to over $19 billion last year. Good morning, JK. Apart from these data, we also have a geopolitical event where President Trump is going to be speaking with President Putin. How are you reading markets positioning right now?
Good morning, Swaraj. So lots of events, lots of movements happening, and lot more are expected in the coming days. Of course, let's start with the rupee for a change today. It has broken an important support at 86.80. I mean, the dollar has broken an important support at 86.80, and in the offshore, it has traded a low of 86.61 as well. The moves have started a few days back when we did have some inflows, and then as we are getting closer to the financial year end, the export hedging has definitely been elevated. Yesterday, even foreign bankers were seen selling dollars, although eventually data showed that FI outflow was quite, large at nearly $450 million. But I think other selling have actually been much more to meet these outflows, and that's where the rupee has seen some strength. Of course, as you said, the merchandise, or rather the trade balance number from India was vastly improved. The merchandise deficit itself was lower by nearly 5 billion. But if you add the net, export surplus from the services side, we are actually into a surplus, overall surplus, trade surplus of 4 billion is what we are getting for the month of February. And this is a very rare, positive development that we have had. So no wonder, the rupee also got some boost. But let's also not get carried away because the big fall of about 9 billion in imports also indicates that a sharp fall in the economic activity possibly. So that is something that we should be mindful of. And exports, of course, have remained almost unchanged, a slight marginal increase. But I'm definitely looking at the fact that imports have fallen, partly contributed by a fall in gold imports and also by about 1 billion reduction in the oil bill. So I would look forward to the upcoming data on the trade, particularly on the import side and export side. The details, yes, overall surplus data is definitely looking a much healthier reading than it was a few months back. Rupee, yes, I think some more strength can be seen as we move into the year end. 86.50 is a level where probably more buyers will be lined up because the overall sentiment is not really changed for the rupee, but a sustained move below 86.50 can see even 86 coming into play. But that really is down to how much flows we see, as we move in, towards the end of the month. Yes, on the global side, we had quite a bit of data, particularly from the US. It was the retail sales that hogged the limelight. The headline number was somewhat disappointing, coming at 0.2%. It was a positive number compared to a drop of 1.2% last month, but it was below expectation at 0.6. But then again, if you look at the other aspect of the retail sales number, we had the control group, which includes certain category of goods that is included for calculation of GDP. That came a robust 1% increase. So it was a kind of a mixed number. But overall, if you look at the trend of the retail sales, it has not been very strong. And you also read it along with the fall in the consumer sentiment that was shown in the Michigan survey that was published last week. So there is a definite slowdown in the consumption pattern in the US, which is very key for US growth because that happens to be more than 60% of the US economy. Empire State Manufacturing Survey, another indication of factory activity, slowed down substantially as per data that was published yesterday, falling by 20 points to read at minus 26, and this was already at minus last month, and expectation was for an improvement to minus 1.5, but it came much worse than that. The a lot of a fall in the new orders, and then of course input prices climbing at the fastest rate in the last 2 years. All of them point to the economy on the manufacturing really struggling, and of course the industrial production data up today will also be something that we'll be looking forward to. Now, what we are looking forward to from here on today, couple of important events, I would say. The German parliament will be voting for the fiscal spending plan proposed by the current government, and a breakup that will pave the way for a huge spending, and also possibly a huge bond issuances by the German government, which will keep the yields on the German bonds elevated, and the euro also well supported. We have the Putin Trump meet lined up on the peace talks, and one of the US official has said that we are probably at the best, rather the most advanced stage compared to any other time in the past about achieving a peace breakthrough. So that's a good point as far as the market is concerned. Of course, we have the lineup of central bank meetings that in the coming days, starting with US meeting tomorrow, and yes, the meeting is not likely to make any change to the monetary policy, but very important meeting as far as the future forecasts are concerned by the Fed economic projections, as well as how Powell, views the upcoming challenges for the Fed because of its slowing economy. At the same time, we have a threat of rising inflation due to the tariff policies. So we do have time till April 2nd, by when probably people do think that there will be a lot more clarity, and perhaps not as severe situation, but one cannot take things for granted. So perhaps US Fed is now suddenly seen in a very tough situation to balance between growth and inflation. So that's where the importance of this Fed meeting lies. Of course, Bank of Japan is a much easier call. They don't want to increase the rate as of now immediately, although conditions are ripe for a future increase. Bank of England, again, not going for a cut right now, but the discussion will be on when they will cut, whether that it will be May or later. On the currencies, euro has again pushed to the higher end of its recent range. Seems to be very well supported. One of the technical developments which I'm watching, and normally historically it works very well as far as the euro moves are concerned, is the euro against the yen, which has crossed the 200 DMA, that daily moving average. It's just broken that level, and staying above that for a couple of days will actually change the trend to a much firmer up move. So that is something that I'll be watching. It's a proxy for not only euro moves but also for the the risk sentiment, what we have seen in the past. Yen is weaker because US yields are higher. At the same time, euro is also stronger because euro yields are also higher. So that is a premise under which this euro keeps moving, and its movement also means that yen is weaker, which indirectly means that the risk sentiment is stronger. So it's a very interesting time. We need to see whether the euro after the event breaks through 1.10, or whether the market treats it as a buy rumor, sell the fact, and sells the euro after the parliament approves the debt break. And of course, we look forward to the central bank meetings and future projections. Thank you.
Thank you, Rick. And I think the key things to look forward to today would be the German parliament voting on the fiscal spending plan. This would mean significant more bond issuances and more spending. Of course, we also have the Putin and Trump peace talks to look forward to. When it comes to the global markets and the data, it seems the retail sales numbers was mixed. Headline was disappointing, but the control group, which is used when it comes to the GDP calculation, that came in at 1% increase. So overall, a mixed picture. Factory activity slowed down substantially as per the data yesterday. So all this makes Fed's job even more trickier. When it comes to rupee, some more appreciation can be expected because it has broken an important support of USD INR has broken an important support of 86.80 as financial year end is coming close. There may be some exporter selling and some more flows. And when it comes to the trade balance, we saw an improvement. Merchandise number was lower, and the services number has been solid. The overall trade balance was at $4 billion surplus, which was a good print. But as JK mentioned, the import side number needs to be seen for the coming months because currently the import side saw a fall in oil bill and the gold imports. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.